Good evening. This is the Elliott Wave update for the S&P 500 and the NASDAQ 100 for Thursday, November 2nd, 2023. In my opinion, today was an incredible day. An incredible day where the buyers just flocked in. They just came pouring back in. And because the interpretation of the Fed, everything is A-OK. There's no problems. We're all good. We're operating on full cylinders. Whatever the story was, it got full attention. Plus, being that it is the 2nd of November, and again, we get that roll coming in, which I normally would associate with that second Monday, Tuesday. So in other words, next Monday and Tuesday is where I would expect it, but maybe it really was coming in today, where we get a large influx of capital from 401k and IRA accounts, et cetera, et cetera. So interesting day. Strong upside here in the S&P, currently now trading up 75, and it's been higher. Apple's earnings did come out. It was a miss, but they're okay with it. Now, they brought the stock down a little bit. Stock closed at 177.50, or call it 177.60, trading at just under 176. So I would imagine that between now and tomorrow morning, and then we're going to get a little bit, it'll all filter through, and the stock might start to come down, which would bring the market down, which would bring the NASDAQ down, et cetera, et cetera. So again, I want to present a technical picture. I'm starting here in the S&P. I'm starting on the 4-hour chart, and I'm presenting a slight alteration to what I think has going on so far. I have been counting these first two, 1, 2, as intermediate degree, first and second, which puts a lot of pressure on whatever comes on the balance. And so what I've now done is going that we're still going to be inside that intermediate first wave. The trend is still of a corrective in nature, and that it's heading lower. But I'm dropping it down to a minor degree and counting out the minor third, which actually goes and replaces how I originally had counted this out as a 1, 2, 1, and this being a 2. So, and what that would have suggest, right, again, that what we'd have is 1, 2, 1, 2, and it just didn't fit anymore. So I'm replacing it all with that it's 1, 2, 3, 4, 5, minor 3. So minor 1, 2, minor 3. This is a minor fourth wave. And I grant you that it's extraordinary, but so is this entire move. This entire beginning of a primary C wave has just been extraordinary. And this buying back in off of 41.22 because the market was oversold, because a lot of the individual components were oversold, has been remarkable. And in my view, now we could talk about likely a lot of the causes and really what's behind it. And I'm sure that each one has a little bit of a say in how this market has been trading. Again, the largest for me, and I know I talk about it all the time, is zero DTE options and more frequent expirations in terms of we have them every day in the major ETFs and indexes. But then we have within all our component companies, we have every Friday as an expiration. Every Friday is like, where do you want to put it? We'll figure it out. And we're just going to take it right there by Friday. And so that has been, I don't know if we want to say it's been disruptive to the flow, because when the market is deciding it's going down for a particular reason, it tends to do it. When it tends it's going to go up, it just does it. And again, I'm not really sure, but we had a couple of brokerage firms declare that the bottom was in. And so I think that we got that extra push today, because now with the Fed out of the way, even though they did exactly what the market had projected in terms of they paused, but I guess they're interpreting Powell as being a little bit more laid back, a little easier, a little dovish, a little, but still said there's still work to be done, still said inflation can be problematic, still said we reserve the option to hike, continue to hike. So, but how the market wants to perceive it, how people want to perceive it, that's one thing. But it kind of fits. So here we are, technically, 1, 2, 3, minor 3, minor 4 in progress. And out of that, it's going to be an ABC up. And I think we're inside that C wave, and 1, 2, 3. So we get a little bit of a 4, and we get a 5. And so the resistance, while very similar to the other, has pushed it a little bit more, where 4,400 should not be out of the picture. Now, again, we're starting to see where, things are becoming more diagonal in nature. And that's really, it's through my conversation that I'm having with a couple of subscribers that I'm reintroducing myself, I suppose, to diagonals. Of course, they've always existed, but I had different places where I would definitely look for them. One of them being in a fifth wave position, either going down or going up, because it just kind of pinnacles right to that point, or it just dives straight into that point. But you always got that diagonal. You always got that triangle in motion. And now people are putting together where they're seeing the diagonals, and the diagonals and sometimes the rules have sort of changed, and there really aren't any. And I'm beginning to try to interpret that and look at the market because the counts that they're presenting to me work, and they fit, and it goes along with pretty much with what we're seeing. And I realized, particularly in the NASDAQ, I needed to give additional room to this lift that the market is giving itself off of that 14,144 low. And I'm going to talk about that in just a minute. Back here in the S&P, I'm presenting this count, which would suggest that we have one more minor degree fifth wave down, and then that would then give us the first wave of intermediate degree. Remember, primary C, we're looking for 5 waves of intermediate degree. And wave 1 could definitely be a diagonal. It could diagonal right down into it. We still have that fifth wave yet to kind of come in, and it may just do similar to what this did. Kind of move straight down, and you could just get it right down to that point. And maybe that's the type of fifth that we're going to get, and that'll fit right in there, and we'll put a intermediate 1 underneath it. Versus before, a minute third within this fifth wave. So, or within however I was terming it before, we were inside the intermediate third wave, and we were inside minor 3. So this would have been minor 1, minor 2, and this would have been minute 1 of minor 3. Well, minute 2, yep, it can actually get as close as it wants to there. So I'm still, that's now, I've not thrown that count out. It's still there, but I'm trying to see if this might fit better to what the market's actually doing. And so again, what I believe we're looking for a turn, but I don't think it's going to come just yet. Tomorrow morning, we do have let me just kind of go over what we have. Tomorrow morning, we have non-farm payrolls. The Fed Vice Chair for Supervision, Barr, the Vice Chair Barr, he's speaking somewhere, but he's starting at 8 o'clock in the morning, so I'm going to think he's in Europe. So he starts to talk, and then we have the employment. So we have U.S. non-farm payrolls, and it's at 8:30 a.m. Eastern. And then we have at 9:45 the S&P U.S. Services PMI. And then again, Richmond Fed President Barkin is making a TV appearance. We have ISM Services at 10 a.m. And then one more Fed Vice Chair, Michael Barr. Oh, he's speaking in 2 places. Oh, he's got 1 in the morning and 1 in the afternoon. Busy guy tomorrow. So what actually they're going to be talking up, yet to be seen. But we do have some numbers tomorrow. If those employment numbers come out favorable, then we're going to rally. Of course, they're just going to take it right through Friday. But if not, then, or if Apple really starts to trade lower, in Asian markets or in European markets. And then again, when we reopen tomorrow, then I would suspect that we start to move lower as a whole, that it will affect all of the market. Because what I found interesting is that, Apple's earnings come out and Tesla decides to trim about $1.50 off its close. So, kind of weird. Well, Apple, they miss. Tesla, you're going to go down again. So I think the market is kind of just a little bit working on an overbought. But I want to also share with you that you'll find it very hard that most of the time you'll get oversold gets airtime. Overbought, you can never overbuy the market. Everybody's bullish. Everything's bullish. We always want to be going up. It's like, really? It's like, nah. The market is very oversold on a 4-hour chart, by the way. There you can see extreme. I think it's going to crest. It should start to come down, and that will force this all into play. So looking at the daily, so we can just take a peek at our moving averages. Well, we saw that the 20 continued to go down, and now it has gotten flat, and the market has reached up and touched the daily 200, and that remains right at 43.40. So went up and touched it. Now it's closed, or it's trading below it, or now has closed for the next hour, traded below it. We'll see what they want to do when it reopens. I'm suspecting that it likely will continue to go lower, and that remains in place as resistance. Additional resistance via the 50 comes in at 43.87. Over in the NASDAQ, index that we love to hate. I'm going to start on the 4-hour chart here as well. Now, I've changed this as well. This in the only way that I can make it into it's a diagonal is to count that the third is still in, and this is again a wave 4, and we're going to turn it around. Those can be, I need to change those color to the minuet, so that they are, because they're minuet inside of a minute C wave inside of a minor fourth wave. Again, if indeed we're diagonal, then fourth waves overlap wave 1. Fourth wave will overlap wave 1. So it again, it fits, and it's a little bit cleaner, a little bit. I'm leaving it there, but I still have the other one, which would say intermediate 1, intermediate 2, minor 1, minor 2, and then minute 1, minute 2. So we've not broken that rule on this one. And even on a wave 4, it's just so big for me. But I'm showing this because actually I kind of discussed it and thought I'm going to show this to see if indeed that is what is at play. But otherwise, this is an alternate, folks. This is not what I'm going to. But the only way that I can really show the alternate is tear down the other chart and rebuild it. Because I don't get to just have it done mechanically. It's all done by hand. So, but I want to just say that my preferred remains intermediate 1, intermediate wave 2, and then minor 1, minor 2, minute 1, minute 2. So seriously, under that count, it's a lot stronger than this one in terms of what comes next is a serious rollover, and just get out of the way. We fall, we fall, we fall, we fall, we fall. So, but the stronger this thing gets, in a wave 2, I would expect that. But this actually not took the wind out of my sails, but it made me go like, wow, they are just doing nothing but plowing into this market. And again, I don't know what it was or what really was behind it other than Apple reports. But it just really made me stand back and go like, wow. And you pretty much just, on a 4-hour chart, you just kind of bought it and waited. But if I took it down like to an hourly chart, there were some points, but not many. So this could be a 4, then we get one more. And again, under either count. Now, I can't promise you that after tomorrow, I will be leaving up this count, but I wanted to show it. If indeed it's a diagonal from the July high, this is kind of how it's unfolding. And within the diagonal, a minor 4 would be expected to overlap minor 1, and it's done it. It's done it big. So we'd be looking for this thing to just kind of die and collapse in a diagonal coming down in a 5th. We'll see. So we're running 2 together. Both actually, though, same with the S&P, both are suggesting we have an additional leg down to do before an intermediate wave 1 is complete on either market. A diagonal one in terms of the NASDAQ, and likely a diagonal one in terms of the S&P as well. And that would just complete the intermediate wave 1. So the whole scenario, the whole cycle wave A completing, the whole primary C down in the cycle wave A down would continue into 2024, at least likely the first quarter. Okay, so in the NASDAQ, we do have additional resistance at 15,196, so 15,200 basically. And it's already overlapping. And if I'm going to allow it, I'm going to have to live with it. But either that, if this is minute 1 and we're in a minute wave 2, then it can again. It also has next resistance at 50,143. So let me just kind of just put that in if indeed it's still the other. Then we're going to go down and go to this fib. We're going to go from there to there. So 618 has been surpassed, and 786 is 15,196. So that one is very close to the 618 for wave 4, which is pretty incredible for me. So those two would come in, so no matter what. So I kind of was, because we broke above the other so cleanly, thinking, well, but if we get back down below it now, which we are, then I would suspect, let's see, we're back below it, that if we start to head down, if we're going to keep it in a wave 4, I'm not looking for a whole lot, right? Maybe down to 14,880. And then it rallies up and to complete this thing. It's going to be a tough one. It's going to be a tough one. Because either that or it's done. Maybe this is 3-4, I don't know, and this is done. And now we just start to roll over. And if that's the case, then I'm just looking for it to start to break down, break below the moving averages, and keep on going. And keep on going. Because if under either count, the downside should be strong. Under either count. So whether this ends up being minute wave 1 and this is minute wave 2, we're dropping in a third, it should just go very quickly. All of this should just be surrendered very quickly. So again, to me, at this stage, where we've got the economic news tomorrow morning, maybe, I don't know, but outside of that, which they seem to be brushing that all aside, we've had a lot of employment data presented this week, and they just brush it aside for the Fed. Now, they like the Fed, so whatever comes out tomorrow, brush it aside. I don't know. Or it's going to be something more severe, something on the global stage, something stupid, basically, in terms of the war, Israel and Hamas, something, it escalates, it broadens, and that could upset the apple cart. So again, we'll wait, we'll see, we'll trade. But again, let's look and see if we can't get a little bit more to the upside, and then we'll be done. If not, then I would consider the very strong possibility that this upcycle is complete and we start to head lower. And again, it's starting to break. We got the 200 at 14,908, the 100 at 14,834, and then the 50 and the 20, which are both, the 20 went back above the 50 today, and that gave a lot of oomph. Both of those are sitting at like 15,540. So that's all got to come undone. Now, 4-hour chart in the NASDAQ, extreme overbought. I mean, look at the daily. Still got room, still got plenty of room. How are those moving averages? We're heading towards the 50. We broke above the 20, gave it a little shove today. And now we got the 50, and that 50 is at 15,106. A break there could shove it right to 15,200, because what we got above that is the 100 SMA at 15,331. All right. It should be another wild day. I would expect a lot of movement tomorrow. We'll see. Again, expiration. Like I said, we have the non-farm payrolls. We have a lot of Fed people out talking. Let's see what happens. The next Elliott wave update will be on Sunday, November the 5th. And I may do what I've been doing, is just combining that Elliott wave with a big picture update all at the same time. And if so, some of it might come out on Saturday, some of it might come out on Sunday, but Sunday seems to be my better day. All right, everybody, have a great trading day tomorrow and have a great weekend.